Hello, welcome to Market Call. I'm Amber Canwar. Today we've got Kim Bolton on the show, President and Portfolio Manager at Black Swan Dexteritas. We're going to be taking your questions on technology stocks, so there should be no shortage of callers today. Give us a call, 1-855-326-6266. You can send us an email to marketcall@bnnbloomberg.ca. Kim, great to have you in studio.
Thanks, Amber. Nice to be here.
Great day. I guess every day is a great day to talk about tech stocks, but boy, are they really the bells of the ball right now. Are you getting a little nervous about just how well they're doing?
Well, I don't know, you got to ride the wave, right? So actually in our fund, we have about a 45% hedge, which is a little bit overweight. But, you know, we got the top 5 stocks in the market are our top 5 stocks. And so you just ride the wave until it doesn't.
Well, I guess that's the question. How do you think about what it starts to look like when the wave is coming back, crashing back down?
Probably, I don't know, Amber, if you look at the possible catalysts going out, maybe a change in tone on the interest rates could
But
do
even
it.
that didn't seem to derail
them
so far.
No, even when
Yeah.
it got up to, you know, when the 10-year U.S. Treasury got up to 4.5, 4.55, you know, the ones with the deep pockets that are really sort of at the front of the parade, they you know, they can weather it. You know, the software stocks are interesting because they've really sort of taken a back seat to this whole AI side.
I think that's an important point that you bring up. It is not all tech. And in fact, within tech, the internals don't look amazing. Maybe they're a little bit better than the broad market in terms of the stocks trading above their 50-day moving average. But it certainly is not uniform, right? You still have stocks that are making lows in the tech sector.
That's right. If you actually look at the NASDAQ 100, there are a heck of a lot more making new lows, and certainly the majority of them are sitting below their 50-day moving average. But, you know, the big mega cap guys are holding it up. And, you know, in the NASDAQ 100, those top 5 stocks account for about 30% of the NASDAQ 100. And so, they're at the front of the parade. Yeah.
So I hear you that you're holding on to that big 5. You think that the rally can continue. Are you also nibbling away at some of the underperformers, or you think their time hasn't yet come?
You know, if what's really running it is this whole AI revolution, then it's the picks and shovels right now. The rest of them will join in the parade, but it's still the infrastructure guys. You know, it's the data centers, it's the infrastructure, it's the server suppliers, the whole semiconductor side. However, you know, we continue to trim, and even for NVIDIA and Microsoft, Google, Apple, you know, we trim those, and we actually go to those ones that are in the infrastructure side of things, the hardware. Which is interesting, right? Because for years and years, from 2011 to 2022, it was all about the software, right? Once in a while, the pendulum would swing over into the hardware, but it's swung way over there right now. So even the likes of Dell and Cisco, you know, the servers, the blade guys that are servicing the data centers, they've done tremendously well too.
Well, so to your point, right now what's working is anything that's benefiting from those investment dollars. Companies, hyperscalers are investing. They're investing in all of those picks and shovels. When do you think we shift from hardware to, okay, we have to start seeing a return on these investments in theory and turbocharge growth? How many years does that take?
I think it'll probably happen for the end users.
Yeah.
I don't know about the software guys, but for the end users, everyone's being forced to be a first adopter of AI because it's supposed to help the bottom line. It's supposed to help the margin side of things. And so I think before the software group sort of joins in, it's almost like the software is going to become sort of ubiquitous. You know, when you think about artificial intelligence, generative AI, it's all about analyzing the data. So, you know, there is a bit of a narrative out there that it's going to make the software companies sort of take a back seat because people are going to be able to get their analytics actually from the AI tools that are embedded in the hardware.
And we've seen that in education software as well. Those ones
And
have been
healthcare,
totally,
right?
yes, and healthcare.
Yeah.
All right, we've got to take a quick break, but
Okay.
great to get your lay of the land, how you're thinking about things, and hopefully that gives viewers a sense of what Kim can talk about. Remember, we are talking tech stocks broadly. Phone lines are open. Give us a call. Welcome back to Market Call. We've got Kim Bolton on set. We're talking tech stocks. Let's go to the inbox for our first question coming from Galen. What are your outlooks for Universal Display Corporation, please? Is it expected to be dead money for a couple of months? And do you hold it? Oh, looking at the chart, it looks like it's alive and well.
But it's interesting, you know, I guess, is this Galen, I think?
This is Galen, yeah.
It's actually had a great run. Well, you can see it. But I guess, Galen, what you're referring to right now, sitting up at 209, the average analyst 12-month price target is 209. And so it's very, very fully priced. Just for the other listeners and so on, OLED, they're the ones that make the screens on the iPhones, and they do it for TVs now. They do it for laptops and so on. And they're sort of just they're the king of the hill. Well, they've been around since 1985 out of Ewing, New Jersey. And they're the ones that are the king of the hill when it comes to the organic light emitting diode technology, which is what the screen is all about. Not only in handsets and laptops and computers, but now because of the whole virtual reality, artificial reality, it's getting into the headsets too, and even into the phones. So there's not a lack of demand, but there's not a lot of lack of demand actually for the stock too. So it's fully priced. You know, I would actually recommend, I think you can probably, before the end of the year, get it down closer to sort of between 200 and 205, add to it down in the 190s and the 180s.
All right, let's move to another question also coming from the inbox, this one coming from Roy. Can I please have your opinion on Converge Tech Solutions going forward, particularly over the next 12 months? Another one of these stocks that's off the 2021 high, but it's done all right recently.
It's done okay, but it's not done as well as sort of the big guys out there. So, and it's got, well, it's just shy of $1 billion market cap. I think it's sitting right around just under $5. 12-month price target is $6.55. Pretty widely held out there. And so they do the end-to-end IT service provider, all the way from the analytics to the application modernization, cloud, cybersecurity. So it's very much sort of a regional supplier. Unfortunately, they got removed back a year ago, just about a year ago now, from the S&P TSX capped composite index, which sort of dragged it out of some of the portfolios. But I think, you know, if you can buy it here, buy a third here, buy a third down at sort of 4.5, and then possibly down at 4.25.
All right, to the phone lines now. Taraver in Sierra Vista, Arizona. Go ahead, Taraver. What's your question?
Thank you. My question is on Lam Research, which is for the semiconductor industry. They do fabrication equipment. Now, my question is, I actually bought this, and it's almost tripled. And I know that the semiconductor equipments, those are more cyclical businesses. So where are we in the cycle? Because I'm thinking, should I sell some and just wait for the downdraft and then maybe buy back in again or not? If you can comment, that'll be great. Thank you.
Great question. So, Lam...
An all-time high? This is an all-time high?
Yeah. Well, It's riding the wave of the whole semiconductor side. I'd sort of so Lam Research is on the equipment supplier side. So the competition is ASML, who does the lithography side, but Lam Research, more direct competition would be over into KLA, which has got to be right up there also. So I would recommend, actually, maybe if you could take a little bit off here, and I'd put some into ASML.
Okay.
That has that lithography side.
Okay, let's bring in John, who probably has the question on everybody's mind these days. John from Bancroft, Ontario. Go ahead, John. What's your question?
Hi, Amber and Kim. Kim, welcome back. And lately we have been talking AI and NVIDIA in the same breath. And I was wondering, looking at your outlook in the near term, what would be your target if you are still invested in NVIDIA at this point? Thank you. Thanks for the opportunity. Bye.
Thanks, John. I was waiting for the question.
Yeah, I know. We took our time. 12 minutes into the show, it finally came.
It is our largest holding. It's about 8.7% in the fund. In our separately managed accounts, it's definitely in the top 5, 10. You know, let me just sort of back up to the beginning of the year, and I guess it was probably trading at around, I don't know, 800 or something. And we used to write calls against it because it looked like it was getting expensive. And then it was such high maintenance because you didn't want to get taken out of the position. So you roll up the strike price. Now we don't even write calls on it. So 135.
Meaning you're not even hedging the position.
No. We do hedge the portfolio with the indices, like with the NASDAQ, and also buying some puts. So for the portfolios, yes. What I've been recommending, John, is actually set up sort of rolling stops just down below. Now, a stop is really sort of up to the individual. Certainly, right now, trading it at 135.5. You know, the average analyst out there has a 141, so it's not that far away. But every time it gets toward the price target, they just
nudge it up.
Yeah,
They're really
they nudge it
marching
up.
to market.
And now the most valuable company in the world.
So let me ask this way. It's your largest position, a core holding. You guys must stress test your thesis regularly.
Every morning.
Every morning. What's the number one risk for NVIDIA?
Actually, it used to be that's a great question because it used to be the supply side of things, right? Whether they could make it fast enough and get it out there. Now, I guess the biggest risk is the demand, but their order book goes well out into 2026, so that shouldn't be an issue. However, you know, Amber, just think about during the pandemic. Remember, everyone ordered so much hardware and software, and then the pandemic was over, and they just decayed on the order book. And so that could be a risk out there. But right now, you know, in a technology portfolio, this has to be your largest position.
Great point. Kim, thank you so much for those thoughts on NVIDIA. We do have to take a break here, but don't worry. Plenty of time to get in those questions for Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas. Anything tech, we'll probably take those calls. Phone lines are open. We'll talk to you on the other side of the break. Welcome back to Market Call. We're talking tech stocks with Kim Bolton. Let's go to the phone lines. Peter is in Markham. Go ahead, Peter. What's your question?
Thank you for taking my call. Question is on AMD. Wondering what Kim thinks about this chip maker or designer. Thank you.
Thanks, Peter. You know, this is a funny one because AMD was supposed to be the next, you know, big NVIDIA out there. And then it's just sort of lagged. And so it's sort of sitting here right around 155. It has a pretty good runway ahead of it because the average price target is up around 190. We still own it. We've taken a little bit of profit out of it. But
Why do you own it? You already own NVIDIA. Why do you own AMD?
Because it might be the next NVIDIA.
Well, I think that's important to get. Yeah, like what's the thesis?
Well, it should have been, but it's not. You know, another interesting thing about AMD and NVIDIA, they have something in common.
I know what it is. So you say it. You say it.
The CEOs are second cousins.
Isn't that wild?
Yeah, there's something in the drinking
What are the
water.
chances? Yeah, I know that family reunion. Maybe it gets testy at times.
Around the Christmas tree, yeah.
So the long story short is you're holding.
We own it because you should own it because you're looking for the next NVIDIA out there. You know, there are some. There's a very small one, and I think I've mentioned it before, although it hasn't moved, but I think it will move, which is Astera, ALAB.
ALAB.
Labs.
Astera Labs, okay.
Yeah,
Smaller cap.
It's around, what, 11, 12 billion? I
Yeah,
think.
10 and a half.
And it should, it does all the right things for the hyperscalers because it makes them run faster, more efficiently on the power side of things. And all of the hyperscalers own these guys.
Just IPO'd in March. Has already pretty much double that level. Let's keep going with the calls. We've got John from North York. Go ahead, John. What's your question?
Hi, I'm wondering about ASML. I've done well with it. I'm just wondering what a good exit point might be. Thank you.
Thanks, John. Exit point. So currently trading, 1,060-ish? And we have a 12-month price target. We own it. We haven't trimmed it yet. 12-month price target of 1,160. So it's still got a decent runway. But you know, they are sort of the king of the highway when it comes to that whole lithography etching side of it. There's another one. So they're an equipment maker for the semiconductor side, using that lithography technology. But there's another one sort of running behind them, which is Canon. You know, Canon, the
camera company.
CAJPY. And so, you know, John, if you're concerned about ASML or if your position is getting a little bit too big, I'd actually leg over into Canon.
Let's go to Moaz in Vancouver. Go ahead, Moaz. What's your question?
Well, my question is on Fortinet. It has pulled back about, and my question is, should I exit or should I stay in there? And particularly because can it compete like somebody like CrowdStrike? Thank you.
Should he
Thanks,
stay or
Moaz.
exit?
So it's currently trading right around $59. I'd hang in there, but Moaz, I wouldn't hold it going into the earnings, which has got to be in sort of the later, I don't know the date, but it's got to be later July. Fortinet, the management is tremendous. However, they're very, very conservative. And Moaz, you've probably seen it every time, well, for the past 2 or 3 earnings, they just sort of lowball it and it sort of rolls over, but then it always comes back. So,
Estimated earnings date is August 2nd.
oh, okay. So
That's just an estimate.
yeah. So Moaz, I'd hold on to it. You know, there are other players in that cybersecurity place. If you ever get a chance to buy into CrowdStrike, I think it'd be a great opportunity.
Okay, let's squeeze in one more caller. John's in London, Ontario. Go ahead, John. What's your question?
My question's about Enghouse. I hold in my TFSA. What do you think about the long-term prospects for the company? And do you think the risks of generative AI are real with the stock?
Thanks for the call. So, I don't know. We've traded it. We've never really invested into it for the long term. Once it gets
what is it again? Mapping software?
Yeah. And so, but it just hasn't performed all that great. You know, it's almost like a mini constellation, because that's how they build their businesses, out of acquisitions and so on.
But without the success, I guess.
Yeah.
Okay. So
All
you don't
right.
like it?
No.
We're going to take a quick break. We are going to check up on Kim's past picks. They've done pretty well. We'll catch up on those when we come back. Time now for a look at past picks, and the returns are pretty juicy. Let's start with the first one. These were made on June 7th. The first pick at that time was Analog Devices. And when you picked it, I would say, things were choppy. Mm-hmm. The outlook was choppy for the company. You've notched a nice 33% return. Mm-hmm. Why did you like it? Are you still holding?
You can see with almost going all the way back to November of 2022, we've been slicing and dicing and trying to find the nuggets that are in the food chain of this whole generative AI. And then again, the theme back a year ago on June 7th was the food chain and the picks and shovels again. So Analog Devices currently trading, $235, 12-month price target of $250. We still own it.
Okay, what about Dell, which is the big home run here? Up 220%. You picked it before I think everybody knew it was an AI stock. People just kind of figured that out this year. But it's had a sharp pullback since its last earnings.
Yeah, it got all the way up.
Are you buying it, holding it?
It got all the way up to, what is that, about 175.
180.
180.
Yeah.
So that's interesting. Like, Dell, I always used to treat like IBM. And if you go back like 5 years ago, you never looked to buy IBM or buy Dell. You always looked for places to short it. However, then the whole generative AI came along, and they needed the servers. They need the hyperscalers needed the servers, and they needed the blades, and they needed all the equipment. When everyone always talked about Dell EMC, it was always about laptops, right? But then they had this division, and they divided it up. So now they have this group called Client Solutions Group, which is all the laptops and so on. And then they brought in the Infrastructure Solutions Group, which has all flash arrays. It has the blades, the towers, the hyperscale servers. But they need that, right, to be able to actually put the chips in and run it. And so that's exactly what we're doing. And we'll see it in today's top picks, that there's still something left in the food chain.
The concern for Dell, even though they're seeing that growth in AI, is it's not translating to profitability. Will that come?
I think it is.
Okay. Well, that's why we saw the stock sell off, is that they didn't see the...
Well, but you see, the whisper numbers for Dell were so high.
High. Okay.
So that's what happened.
I want to get to the third one. Monday.com has had a lot of volatility recently, but since you picked it, up 34%. What are you doing with this one?
And I think probably the reason it took some time is that this is an Israeli company. And it's a big company. It's got a market cap of $11 billion, currently trading $225. We have a 12-month price target of $268. We've actually trimmed a little bit, just to back up. Mundi, their focus is on low-code, no-code technology. So the idea is that you don't have to have a developer to actually do it. But they've really jumped on this whole AI side, and they've come out with Mundi Development, actually for developers. They have Mundi AI, Mundi DB for the database tool. So they're keeping up with it.
Okay, those are the past picks for a casual 96% return on average over the last year. We're going to get back to some of your questions when we come back. Welcome back to Market Call. We're talking tech stocks with Kim Bolton. Let's go straight to the phone lines. John is in London. Go ahead, John. What's your question?
Thanks, Amber, and thanks very much, Kim, for Dell. You have a seat at the dinner table for Thanksgiving in London. Especially Dell is about to get listed on S&P. It hasn't been announced, but they're the highest market cap of the non-S&P 500 stocks. So that's a great choice. Wanted to ask about Micron. I looked at their last 5 quarters, and their revenue is growing by 20% per quarter, which I don't understand. Earnings per share was 71 cents, so they're profitable. What do you think of Micron? I own it. Hold it for another 2 or 3 years. Thanks very much, Kim.
Thanks, John. I guess I'll have to try harder because I really wanted to get to the dining room table for Christmas. So,
well, maybe these chop picks that you do at the end, that'll get you there.
So Micron.
All-time high.
Well, yeah, so 153.5. Interestingly, yesterday, Bank of America just put it as one of their top picks or whatever they call them. And they actually now, Bank of America tends to do this, but anyway, their 12-month price target is 175. But the majority of us out there still sort of have it between 155 and 160. Maybe it'll prompt a lot of us to actually move it down. I think, John, one of the main reasons that Micron has done so well is because their main product, 2/3 of their revenue out there is in DRAM, and so that's the dynamic random access memory semiconductor, and you need this stuff, especially these days with AI, and so that's why they're doing so well. The interesting company because they're a manufacturer. So in the world of semiconductors, you have foundries like Taiwan Semi, you have manufacturers that both design and manufacture like Micron, you have the designers like NVIDIA and AMD, and then you have the equipment suppliers. In the manufacturers, Micron has really done the best job, and there are a lot of companies, and we'll talk about some a little bit later, that are trying to replicate what Micron has done because as you can imagine, if you're a manufacturer and a designer, the CapEx that is required for that is huge in a cyclical business.
All right, so you like it.
Like it.
Okay, let's go to Michael in Miami. Go ahead, Michael. How are you? We're just as warm as you are here in Ontario.
Yeah, it's very good, but cloudy. So I was just on a stock that I've been doing terribly for many years now is BlackBerry. Any opinion on this? Any hope of recovery or safeguarding the company?
Yeah. Mike, I said I'd talk about it, but we don't own it. And I almost look at BlackBerry, here it is, oh man, down at $3.14. It's almost like a lottery ticket. And I know that they're talking about splitting the company up and so on. But Mike, I'd actually, and you could probably buy, I don't know if I'd buy the stock because who knows where the bottom is, but maybe you could write a put lower than this or even buy a call higher in here.
Okay, so no conviction.
But that's what you
on
do
that.
with a lottery ticket.
That's right. There you go. Let's go to Nicole in Montreal. Go ahead, Nicole. What's your question? Nicole, are you there? She's not there, but I know her question was on Qualcomm.
Yep. So it's pretty fully priced right at this level. We actually took our profit in it.
How do you come to that assessment? Like, why isn't it a Micron and NVIDIA fully priced, but why is Qualcomm?
So you can go through various data banks, and you can figure out, because every analyst will publish their 12-month price target. And so we look at the average, we do our own. So Qualcomm will have, say, 22 analysts, we'll make 23, and then we have an equal weighting. So when I talk about price targets, it's ours together with the other 22 in here. But it finally got up, we took profit just over 220 because it got to the price target. And there are other ones out there that you can actually find with a decent runway. Yeah.
Okay, let's go to Jim in Calgary. Jim, go ahead. What's your question?
Hi, Microsoft. I've held Microsoft for about 8 years, and it's done really well. But I've sold about 20% of it, and it still represents 20% of my portfolio. Should I sell more?
Jim, that's a good question. 20% of your portfolio is pretty big. So for us, we never like to have anything over 10%. So, Jim, I'd actually, at this point, you could take some profit. Taking profit on some of these mega cap AI stocks is easy, but the hard part is actually trying to find a candidate to actually buy after that. So, Jim, I'd actually, if you are concerned about it, mainly because of the waiting side, but you still like it, and maybe you've got a lot of capital gains in it, and you don't want to trigger that, I'd write some calls on it. You can write some calls up here.
And do you view, this is more than picks and shovels. It's one of the few that is actually selling software that is meant to do the thing that Gen AI was supposed to do.
Well, on top of that, yeah, and then they have Azure.
And then they have Azure, yeah.
Yeah. So, they have, like a lot of the big ones, they have a lot of horses in the race when it comes to the AI side.
Okay, so you like it?
Yes.
Okay.
It would be third, fourth largest holding in our fund.
Okay, you just had an issue with the weight. Maybe you don't want to put at 20%. All right, we're going to take a quick break. We've still got Kim Bolton. We've still got time for some of your questions. Tech stocks, that's what we're talking about. Give us a call. We'll be right back. Welcome back to Market Call. We're talking tech stocks with Kim Bolton. Let's go straight to the phone line. Stan is in beautiful Niagara-on-the-Lake. Go ahead, Stan. What's your question? Maybe he was too entranced by the beauty of the area. It was on Intel.
Yeah. This is quite controversial, actually, in our research team, because about half of them like it and half of them don't. And I'm one of the ones that I'm not a big... Sometimes I get talked into it. But it was, I don't know, eventually they'll take off. And they should. However, when you have the highest paid CEO in the semiconductor business and the worst performing stock, there's something wrong with that picture. So we actually have it in some of our SMAs. We don't have it in the fund because I just got so frustrated with the whole thing. And so it should have gone, right now we have a 12-month price target of $41.15, but that's us together with sort of the other analysts out there. And right now it's trading at $30.63. And so you'd say, Kim, you got to own it because it has a great runway.
They're working on things. It's a very...
They've been working on things.
I know they've been working on it. So, what would it take? Because what's attractive about it, I think, is that it's down, right? And everything is up and you're looking for any opportunity, a re-rating opportunity.
Yeah. And they're playing directly in AMD's and NVIDIA's sandbox.
Yeah.
And so if anyone who has the deep pockets, they just picked up so much money from the U.S. government to build some more foundries
yeah.
Down in the States. But look at back in, they last reported April 25th. It was expected to be 12.8 billion in revenue. They came in at 12.7, but then they guided lower, and so it just sort of everything falls out. So when you read it, you think I got to own it, but the price action tells you not to.
Let's go to the phone lines. We've got Trevor in Guelph, Ontario. Go ahead, Trevor. What's your question?
Yeah, thanks for taking my call. My question for Kim is on CGI. So I bought it about a year ago, and it had some pretty good momentum earlier this year, but it's pulled back now to basically the price that I paid for. I can see revenue, net income year over year pretty flat, but the forward P is a 16, and it's generating a ton of free cash flow. So do I sell it into the negative momentum, or do I let the price go down and buy, dollar cost average down and buy? I'll hang up and listen to your thoughts. Thanks.
Yeah, it's a good question. We don't own any of the consultants like the CGI or Accenture, which is sort of the king of the hill, because they're trying to find their place in AI. And, a lot of, it's interesting because the consulting side, which really have done well, have been the EYs and the Deloitte. And it's sort of left the likes of CGI and Accenture behind because they're just a true, pure consultant side of it. And it's sort of synonymous with the software side because they're trying to find their place in this AI revolution and whether they're relevant to it.
Okay, let's actually pick up that conversation and go to our inbox because it's kind of figuring out, is this an AI play? It's about Coveo. Can you explain what Coveo offers to AI and the future for this company? Mm-hmm. They say they offer an enterprise AI solution. And
I think you've interviewed them, haven't you? The gentleman from Quebec.
Louis Têtu, yeah.
Yeah. We haven't visited with them. They're a big company now. They're just shy of $1 billion, currently trading at, $7.80, 12-month price target.
The stock is not trading like an AI stock.
No. But when, it provides AI platforms designed to enhance digital experiences, and it all sounds great. However, they are actually building their own large language model on their own AI platform. But it's tough for $1 billion company to compete with a $1 trillion company out there. And
I assume they have to do it profitably. Right, because that's what these Canadian tech investors want to see.
Well, they do these days, yes.
Yeah.
and they're not profitable, right?
But they have to get there.
Yeah. So they reported on June 3rd. They did better than expectations. They were looking for earnings per share, earnings of negative 8 cents, and it came in at negative 5 cents. And then the revenue was actually slightly above, so they're moving in the right direction. But it's just such a competitive field that they're in.
All right, that does it for the question and answer portion. Thank you, everybody, for calling. Kim, for your answers, but don't go anywhere. We've got the cherry on top picks, and you definitely don't want to miss it, considering the last round of picks a year ago averaged a gain of 96%. Stick with us.
2 minutes?
Okay, time now for top picks. We've got Infineon, which is the first one, Infineon Technologies. What do you like? Where do you see it going?
Okay, just before I get into the three, we talked about sort of going through the food chain, right? Infineon, ON, Microchip, they're all well positioned in the AI revolution. Prices don't reflect it. Maybe Infineon does a little bit. But they're leaders in the semiconductor side, all the way from automotive to industrials to edge AI, and definitely within AI infrastructure. Particularly, for example, Infineon. Infineon is currently, $39? We have a 12-month price target of $45. And you can say, well, there's not much of a runway left. However, there's 2 more after this. And so what they do is actually they're in processing power management, and then also in computing infrastructure. And so I wouldn't be surprised if you can actually get a bit of a pullback over the summer here, and I'd look to actually add to it. You could pick it up here, pick up a third here, right around 39, pick up another third down around 36.5, 37.
So be prepared for it to struggle a little, and then pick it up.
Remember, semiconductor, a lot of these guys, it's a cyclical industry, and particularly on the processing, the energy efficiency side, that actually had a bit of a downturn last year, and it's starting to come back this year. So, Infineon.
Let's talk Microchip, a pretty range-bound type of stock. Haven't seen that rocket to the moon like we've seen in others.
Yeah. Again, so they're headquartered out of Arizona. They've been around since 1989. So, they sell smart, connected control systems. They do it around the world, particularly in the microcontrollers and microprocessors. And then they do a lot of analog. So you'll see that, in Infineon, Microchip, and ON, they're all sort of playing in the same sandbox of 4 areas: automotive, industrial, edge, getting it to the edge AI, and then definitely in the AI infrastructure. So you're not just hanging your hat just on AI infrastructure.
Automotive has been challenged. Is that what's restraining some of these stocks?
I think a lot of it actually has to do with China.
Okay, yeah.
And so, they've had to put up a lot of tariffs because if you didn't have the tariffs, they'd own the market.
Yeah.
And so it's taken a bit of a backseat, and as a result, we put up the tariffs on them, they put up the tariffs on us, and it scares people.
But you're still willing to buy them?
Absolutely, but Infineon, ON, Microchip. They're in a race that is in the automotive, yes, but also in the industrial, also in the AI infrastructure, and definitely in the edge AI, which is going to be a big, big deal.
Edge AI is when it's on consumer devices.
Yeah.
And okay, so it's and I know you've already thrown ON into the basket, but on ON specifically, what's your strategy on getting into the stock? What's your target?
Okay. So right now, trading just shy of 71. We have an 82 price target, so I'd leg into it. You can pick up a third here at 71, another third down at 67, and another third down at 64.
Okay. This has been great to have you on.
Yeah,
Thank
fun.
you, Kim.
Thanks,
and
Amber.
as I said, the last round of picks that you did, on average, we were up 96%. I know Dell kind of skewed things, but I guess that creates kind of a high bar for these. So we're going to be doubling our money, right? Well, I guess on Infineon, you only see a couple of bucks.
Yeah,
It's a bit more of a conservative play.
But the whole technology arena, we've only been talking about AI, right?
Yeah.
you still have the whole e-commerce. You got the fintech side of things, the automotive, electric vehicles, and so on. So it's a big market, and the pendulum will swing. And make sure that you get into stocks that are not just playing in one sandbox.
And that's what these are today.
Exactly.
All right, I really appreciate it. Thank you, Kim, for these insights, taking the time to pick these thoughtful ideas. And thank you, as always, for tuning in. I'll catch you next time on Market Call.